For the viewers, Martin is the head of transformation for mortgages at Lloyds Banking Group, the largest retail bank in the UK. And Martin, thank you for joining me. I mean, it's a very different setting. We were originally supposed to have this session in the Lloyds cricket ground, where you were to be our keynote speaker. But we're all adapting to different ways of working, and COVID situation has certainly upended our ways of working. So thank you for agreeing to do this in this format, and welcome, Martin.
You're very welcome, Ajay. Thank you.
So look, from a mortgage industry, like most industries, this industry has been severely impacted. The last I read was that the number of transactions on hold, mortgage transactions on hold, around 375,000, which is a colossal number. And it had an impact on products availability. Some vendors have, or some banks have rather, taken decision to remove some of the products which were before COVID. And the situation looks not the best at the moment. So what is your view on the market, and where are you spending most of your time, Martin, if I may ask you? And your perspective on the market would be good. How bad the situation is, and do you see post-COVID things recovering to normal? So I'll take it over to you, Martin, to get your perspective.
Well, I suppose I'd probably say it's too early to say what will happen. We're really at the start of this, and how quickly the market will recover is still unclear. The way the speed at which you get the market data in mortgages is also, because it's such a long pipeline between application and completion, it's going to be June until we really know what happened in April. So that's one message. I think some things are clear. Certainly the purchase market is not as strong, and that sort of home buying chain has had difficulties, which I'll probably come back to. The remortgage market has remained strong. Lower interest rates has probably prompted people to look again at their mortgages. A branch-based business has been reduced because of this crisis, but other channels have picked up, and some of our intermediaries are struggling, particularly the ones that are estate agency based, because they're very reliant on the purchase market. So there's lots of different moving parts, but what's the net impact of all those moving parts is not really clear yet. I think one trend that we'll see in the market for a while, I think, though, is this face-to-face interaction may get replaced by the interaction like we're having right now. I think millions of people are becoming more comfortable with using some of this technology, and video was already part of our channel mix, but not used a huge amount. But I think we could see a shift in that, because I think people become more comfortable with it. 10 million daily users of Zoom in December is now something like 300 million. So that's a big shift in customer behavior.
Yes. So no, thank you. I think the good perspective and good view on what you see it, and like you said, it's early days. But let me just step back and ask you. Before COVID, right? You were undergoing a mortgage transformation journey within Lloyds. So it'll be good to get a perspective of what that journey was, and how did you make yourself ready for this sort of a calamity. I mean, nobody's prepared, but the transformation definitely helped you be more resilient from a digital perspective, and also you did a lot of agile transformation while you were driving the mortgage transformation work you were doing. So give us a sense of that journey, and how you got, and how did it help you during this period?
Yeah, I suppose when I started in this role, we were trying to understand why our digital channels were not performing as well as we'd like them to. And I think the big realization that we had was that it's not a binary choice, digital or our human channels, with colleagues helping you. those aren't binary choices. It's not either or, they're complementary. And that sort of was a big shift in the strategy and approach, which has proved quite successful. And I think, and as you say, in a way, that has prepared us for this world, because if you've got a digital funnel at the beginning of your process, and you can route customers to colleagues wherever they're based, whether they're based in a branch, based in a contact center, or increasingly working from home, we can better cope with that demand and be a bit more resilient operationally in the current situation. It's definitely, we've had to massively ramp up the number of people that are enabled to work from home in recent weeks and months, since the crisis hit. And that's but because we had some people doing that, scaling it up was much easier than if it was an entirely new capability we were trying to develop from scratch. And I guess the other thing you talked about was agile. So I think the agile mindset has helped us, because certainly we've had to respond quickly to major shifts in demand. I suppose mortgage payment holidays was one of the biggest ones. So we had to deliver a new solution in days to help us process mortgage payment holidays. If we were just reflecting on it this week, if we hadn't developed a digital solution quickly for that, it would have required about 500 people to process those payment holidays. And, I've heard estimates over 30,000 hours, but that was largely processed digitally.
Wow. No, I had a similar conversation with one of your peer banks in the UK, where the chief operating officer was mentioning that, before COVID, they typically used to have 5 or 7, requests for forbearances. And in March alone, they had 195,000 requests. So that put a huge strain on contact center, the back office functions, and they did struggle a bit initially. But I think similar to yours, I think the whole digital transformation, people have done before COVID has helping in this period to be resilient and react strongly to this demand. So did you also see the surging demand? I mean, is it still continuing, or has it tapered off now?
It's definitely, in mortgages, it's definitely tapered off. We at our Q1 results, we disclosed we did over 400,000 payment holidays by April 24th, wow, which is a huge amount. But that demand has definitely tapered off. Some of the other product areas, the phasing was a little bit later, but we've done payment holidays and credit cards and personal loans, etc., and also some business loans. The real focus now is to make sure we deal with people that are on payment holidays in a timely and appropriate manner when they come to the end of that payment holiday.
Perfect. Thank you very much. So I think one of the things I want to touch upon was, we have last year invested in buying 75% stake in Stater, which is ABN AMRO's mortgage servicing business. And in Benelux, the market is very oriented towards a utility. So this Stater business caters to not only the large banks in Benelux, but also to originators, the fintechs of the world. So this trend has certainly picked up in that market. We are seeing a similar trend in Nordics now. And what really helped us narrow on this business model was, it was completely digitally transformed over the last few years. There was a huge use of AI, machine learning, in terms of, looking at churn, delinquencies, prioritizing as, or sharpening the product offerings for specific segments. Do you see a similar trend in the UK market? We haven't seen any utility or mutualization of the back office yet, but do you see a similar trend in the UK as well coming, or is the market very different than Benelux?
Well, I guess I'm familiar with those models, and I've seen them in as well as the Netherlands and other countries. And And you do see examples in the UK, like for example in life and pensions. There's there's a platform out there from one of your competitors that I think has 12 million policies on it. So which we're migrating some of our legacy business to. But the thing that's missing in the UK so far, I guess, is a scale player. Like there are some people in mortgage servicing, and there's definitely I can see desire to create that sort of a model, and if it was successful, I'm sure there would be demand for it. Because there's a lot of subscale players in the mortgage industry. But for us, with the size of our business and our mortgage book and how much of it is concentrated on our core platform, there aren't compelling attractions to that model for us yet. But I've definitely seen it work in other sectors.
Great, thank you. And what about technologies like AI, machine learning, and also your journey on cloud? Can you just walk us through? Are you using some of these technologies in your area?
It's becoming more and more important. Using machine learning to better interpret the data that we have on our customers, and get them the right treatment. We talked a bit earlier about the crisis, like we're crunching the data currently on the customers that are, on payment holidays, making sure that when they come to the end, we offer them the appropriate treatment for their circumstances, because the vast majority of those customers are still in, fine financial shape, and we should treat them as such. If we, think about the sort of wider business, we've definitely been using cloud to great effect. It's been quite transformational. It's been a very tough journey at times, and there were times a year ago that I wondered whether we were going to make it. But we now have parts of our platform where we do releases every 2 weeks, and if I go back to when I started in this role, it was every 3 months. So that's I wouldn't have believed that was possible 3 years ago, but we're now doing it on a regular basis, and it makes a huge difference to how quickly we can respond to shifting customer needs, customer feedback. We can optimize our journeys, do A/B tests, and all of that is enabled by that shift to the cloud technology.
Great, thank you. That's great to hear. These digital transformation trends have been becoming more and more mainstream now. But I think the impact on business is really resounding now. And this sort of period really helps us see the value of these trends and the whole digital transformation that have been underway for years now.
Yes.
So I think just pivoting to innovation now. If I look at Asia Pacific, and if I look at even some of the Nordic countries, there is a movement towards monoline lenders, looking at specifically in mortgages area, or entire home buying value chain experience. So, with the interest rate environment very challenging, I'm sure banks like yours will be looking for new revenue pools. Ping An is a great example from China, which is sort of interestingly making the whole value chain experience based, looking for mortgages to insurance to transportation to other experiences which are relevant. So are you looking at something like this, and do you see some of the trends in the UK market also coming, given that we have macroeconomic challenges and challenges around the interest rate environments?
Yeah, I definitely see those trends as being present here, and see them being important. I think for Lloyds Banking Group, we start from a really strong position because of the breadth of our product range. So one of the first things that we're focused on is making sure that we can capture, we can fulfill more of the needs of our customers. We do provide home insurance, we do provide pensions, we provide current accounts, savings accounts, and we do find that giving people that single view of all their finances in one place. Like, we're one of the first banks, certainly in the UK market, to allow you to see your pension savings alongside your banking services, and we're finding that's valuable to customers to see everything in one place. So we think, and because we, if we can leverage what we know about customers to meet their needs better in insurance during the home buying process, I think that provides convenience and ease. So I suppose our first focus is kind of leveraging the ecosystem inside Lloyds Banking Group. But I think you're right that if you look outside and look at the bigger home buying process, there are other opportunities there, and it's certainly something we're alert to, but probably more focused on the kind of internal opportunities as a first priority.
Great, thank you. And how are you getting ready for the after COVID situation now? I mean, what do you see in the market? Do you see similar pre-COVID sort of trends coming back to normalcy, and what sort of timeframes are you looking at from a business standpoint? And where are you personally focusing your most of the time now?
Yeah, I suppose like I said earlier, I think it's still too early to judge, the length and the depth of the impact. We would normally be working on our next 3-year strategic plan at this time of year, but we're doing less work on that, and we're more focused on the immediate needs of our customers. I think success this year will be judged more about how we help our customers through this difficult time, and how we help our colleagues as well, because it's challenging for them to cope with this major shift in how they're working. So and unfortunately that means, as you said, customers that are in financial difficulty, that's a big focus. Bereavements, we're seeing more of those, and dealing with those in a sensitive and timely manner is really important as well. Dealing with customer complaints, it's that those are the kind of short-term focus for us, as opposed to revenue growth or interest margins. So I think, and I do think that customers will, they will judge institutions like ours based on our behavior at this time for the long term. So we want to make sure that we retain and build the trust that they have in us.
Yeah. So look, I think it's going to be very different for sure. I mean, our focus as a company is also to help our clients be more resilient, more digitally active during this period. I mean, we are investing a lot working with the clients. We've seen a good sort of engagement going on the digital side of things. The other, priorities are shifting for sure at this point in time. But we also see similar sort of trends where, we have to, be a lot more empathetic to the clients, help them in the current situation, and see the other side emerge on the other side. But I'm sure the other side will be very different. As a company, we are, just to give you an example, we will be, and opening up is a gradual process, but we are thinking that going forward, we will not have more than 75% of our people in offices, right? So this whole, the ways of working is going to shift dramatically going forward. And we're looking forward to, better times. And, I'm also looking forward to kind of, meeting you sometime in person, or hoping to meet you in person soon, rather. But again, it's a terrific conversation. And if there's any last points from your side, would be very welcome. But
Well, just
it was a fascinating conversation.
Yeah, just echo what you said is, even though it's not clear to me yet what that post-COVID world looks like you, I think it's going to be different. And even though it's been a terrible human tragedy, there will be some positives, I think, that come out of it. And I think, the ways of working might be one of them, that will be more flexible in our ways of working and be able to, flex that to the needs of our colleagues. And I think the other thing that should come out of it is a more resilient mortgage ecosystem, I think we're seeing that some of the work that we hadn't quite finished around, digital signatures, etc. That's the failure demand in some of our channels that was coped with by sending people into a branch. Those things are causing more pain at the moment for our customers, and so I think we'll see more focus from all lenders on fixing those things, so that the impact of a similar crisis going forward will be much less. But I think there should be positives as well in the future coming from this.
Perfect. Thank you very much, Martin. Great conversation, and thanks for this time.